Back to the I Am Real Estate Show. As I already said before, we're here with Ray, Sandra, Danielle, and we're here with John Spurr, who was with Inspired Life Mortgage. She's the founder and CEO.
You know, something that people also kind of are afraid of is this number of having to have 20% down, and that they feel like if they don't have 20% that they can't buy a house. And of course, we know that that's not true. There are tons of options, and you can get in, depending on the kind of loan, with a much smaller down payment. If someone is struggling with that down payment, and I'm talking, struggling with coming up with the 3%, what are some options for them, or what does that look like for someone who's trying to buy their first home?
So there are a lot of down payment assistance programs out there, and they are not all created equally. The Pima County IDA just released 2 or 3 new ones. Most of the down payment assistance programs I can't do. I have one of my own that I'll talk about, but I first want to just talk about DPA, or down payment assistance in general. A lot of these have some sort of string attached. Mm-hmm. It's not, for the most part, it's not free money. If it was a free money, they'd call it a grant, which is what I have. I have a grant program. Down payment assistance, they can't call it a grant because grant implies free money. Down payment assistance is, we're going to throw something at this. We're going to assist you in getting into the home, and there are strings attached. Now, some of these programs, the strings attached are not horrible. One of the Pima County IDAs, correct me if I'm wrong, it's a 3-year. After 3 years, it's fully forgivable. And I think that one, was it 10,000 or up to 20,000? I think it's up to 20,000. The newest one they came out with.
I actually have not seen the limits on that.
I think that the newest one they came out with, I believe, is up to $20,000, but there's a very limited list of lenders that have access to it. There are pros and cons to down payment assistance, and the last time these programs came out that had big dollar amounts, we were in a higher rate environment. And you have a 3-year or 5-year period that you're locked into this loan program. And if you refinance or sell before that 3 or 5 year period, you owe all the money back that they gave you for the down payment assistance. Not saying that we're going to see 3% rates in the next 3 to 5 years, but we could definitely see 4 or 5. And if you're locked into a rate of 6.5 now, and you're stuck at that for the next 3 to 5 years because of the down payment assistance, that's something you have to take into consideration. Not saying that you shouldn't do it. It's just one of the downfalls to it. The upside is that down payment assistance money solves a lot of problems. Mm-hmm. Getting that payment down where it's manageable, getting you into a maybe bigger house, it does fix a lot of issues in the current market that we're in of being able to obtain a house.
You know, when I bought my first home, I used a down payment assistance program, and I had to keep my home for 10 years. And I had to watch those rates go down so far, and I could do nothing, because if I refinanced or sold before the end of that 10 years, I had to pay back all of it. And eventually it got to a point where I had to just keep the house. It became a big priority. But that is something, to take into consideration. It really does impact your abilities on what you can do. And thankfully these ones are only 3, but
let me just ask you the question though. 10 years, and it is a long time. Was that a good investment for you?
Definitely. And 10 years.
And did you have other options at that time?
No, I mean, I was a teacher. It was my very first teaching job, and I didn't have a lot of job history or anything else, but I was on a contract, and so it was difficult for me to get that loan at the time. Thankfully, I had good credit because my parents had taught me to make sure and have good credit, so I did. But, having that help me to get into my home was the only way I could do it. And there were restrictions, certain locations at that time, there were foreclosures, and it had to be a foreclosed property, and just the market was different then. But getting into that home and keeping it for 10 years, it was a scary thing. I'll tell you, buying it, very first home, buying it, not knowing what would happen, knowing I had to have it for 10 years. But how much the market has changed over that 10 years, that is the best investment that I have ever made. It was absolutely hands down, no regrets.
And I think that's the point of all of it. It doesn't, again, interest rate doesn't matter. Do we use down payment assistance to get into a house? It doesn't matter. The home should be a long-term investment, right? Very few people have the name, Berkshire Hathaway or whatnot, and they figured out how to make a ton of money off of real estate. We buy it and we should be buying it for long term. And you did that, and you did the 10 years. And I mean, I know the story. You did very well, and I've done very well in houses that I've held on for a long time.
But I'm thinking about everything that in life most of the time has stipulations and have things you have to take on with the risk. So what we're saying about when it comes to DPA is that you have to evaluate the risk. But that's what we have John Spurr here to help you evaluate the risk and see whether that 3 years is worth it or whether he has another option that he can offer.
I actually had clients that took advantage of one of the DPA programs and had to pay back the money. They still put money in their pocket, and even though they were there, I think around 2 years, but in a market that was moving as quickly as ours did, they were able to pay back all of that. In the meantime, their mortgage was less than rent would have been. They were not in the apartment complex that they were trying to get out of, that was important to my clients. And so the perks so far outweighed anything negative about paying that back, and they still made money. So and then same program, different situation, a client who through COVID ended up losing some of their income and was in one of those programs. And so kind of, they had to make that hard call. Do I give up my house and have to pay that back, or do I ride out the storm? And of course we had the forbearance on loans, but they had options. And that was, I think, the most important thing, was that they did have options and they were not renting. So when they did have that significant financial, situation come up, they had more options because of the decisions they had made to get into their home.
And a couple things on down payment assistance real quick. Number one, less than 3% of transactions close with DPA. And we hear it a lot, we talk about it a lot, but only 3% of the transactions monthly close with down payment assistance. The second part is, I see a lot of people that actually have the money for the down payment, and they get talked into doing the DPA because, well, keep your money, you can do the backyard, you can put in carpet, you can do tile, you can do this. Those are the ones that I get worried about, because you weren't in a situation where you needed the down payment assistance to get into the house. It was a convenient thing. And typically those ones are on that 5-year repay. Well, I would love to say I know we're going to be in 5 years, but a lot of us right now don't know where we're going to be in 5 years.
Right.
You could get a job transfer and not have a choice. So again, having knowing all the facts and having all the tools in front of you to make the right decision is key. And having a team like us to be able to guide you through that is key as to, does down payment assistance make sense? Does a grant make sense? Real quick, we have a grant program. You only have to come in with 1%. The other 2% is given to you as down payment from either Fannie Mae or Freddie Mac. It does have some restrictions on it, but it is another great program where you only got to come up with 1% of that sales price. That's not horrible.
And it's a grant, so you're not repaying it.
You're not repaying it.
And we still have USDA loans that are zero down as well as VA loans.
Yep.
Yeah.
Hi, everybody. You're listening to the I Am Real Estate Show on 1030 AM The Voice. We'll be back for more of the show. Thank you for listening. And we have John Spurr, who is the CEO and founder of Inspired Life Mortgage. You're listening to the Johnson Smith team from Indy Realty.